Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 4th of July, 2019, and we are briefly discussing the silver conundrum and wonder what your thoughts are on this very attractive and alluring precious metal. We are all aware by now that silver has many uses in our society today, and some 56% of its demand is taken up for industrial purposes, and the remainder primarily for jewellery, flatware, and investment coins and bars. Like gold, silver is a precious metal, but often plays second fiddle to its bigger brother, primarily because of the relatively small size of the market, its overall value, and also central banks generally see gold as a monetary metal, and very few, if any, actually hold silver. So, what's the fascination and attraction? Well, at its most simple level, silver is normally described as poor man's gold, with a gold to silver price ratio of above 90 to 1. Silver is so much cheaper than gold, and in the event of a financial or dollar collapse, silver is divisible sufficiently in size to make smaller purchases, and therefore is deemed more practical. Many hark back in the United States to the 15th of August 1971, when President Nixon effectively abolished the gold standard. But true silver historians will quote that the silver standard dates back to ancient Greece, where silver was the first metal used as a measure of currency. After the fall of the Roman Empire, the adoption of the silver standard was widespread and included its use in China, India, Bohemia, Great Britain, and the United States. The silver standard officially came to an end when China and Hong Kong abandoned it in 1935. At this time, the adoption of the gold standard began. For the first 40 years of its existence, the United States operated on a bimetallic system of gold and silver. However, silver coins were the favoured currency, and domestic purchases made with gold were rare. The Founding Fathers wrote a bimetallic gold-silver standard into the United States Constitution. The Coinage Act of 1792 defined a dollar in regards to silver. A dollar was to be 371.25 grains of silver, equivalent to about 3/4 or 3/4 of an ounce. This measure was in harmony with the Spanish milled dollar, popular and used at the time as a standardized currency. In 1834, Congress adjusted the silver to gold ratio from what was then 15 to 1 to 16 to 1. This adjustment made gold cheaper relative to the world market price ratio. Silver exportation grew, and by 1850, silver coins all but disappeared in the United States. Gold then became the principal form of currency. But what is this conundrum to which we refer? Well, it's the constant battle between silver being used as an industrial metal versus it being demanded as a monetary metal. The difficulty is this. The world is apparently facing a recession, and so industrial demand for silver is likely to fall. We have seen this in recent years. The industrial use of silver between 2010 and 2013 were over 600 million ounces. In 2014, it fell to 596 million, then to 582 million in 2015 and 566 million ounces in 2016. It rose slightly to 585 million in 2017 and fell again in 2018 to 578 million ounces. As a percentage of total physical demand, industrial production demand fell to 56% last year, compared to 58% the year before and 60% back in 2010. However, generally speaking, though it's not always the case, when silver demand falls industrially, it tends to become more attractive as a monetary metal. So any fall in price from lack of industrial demand can be made up, hopefully, by an increase in price due to monetary demand. It is this situation we're witnessing now. The total supply of silver last year, compared with total demand, provided a net physical shortfall of some 29 million ounces, and yet silver is struggling to reach that all-important $15.50 level. In 2017, its average price was just over $17, and in 2011, when it reached its peak not that far short of $50, its average price for the year was just over $35. So where is the price going from here? Well, today, as we produce this video, silver stands at $15.28, while gold is at $1,415, providing a gold-to-silver ratio of 92.6. Those who believe that such a high GSR is unsustainable allude to silver quickly rising to well above $20 in order to maintain what they regard as an acceptable gold-to-silver ratio. Though if that happens, we'd all better worry, as our recent video showed. As at $20, our friend Harvey Organ believes all banks will collapse. So let's hopefully avoid that one. Now, if China and the United States do not solve its tariff war, then the industrial demand for silver will fall, and so will its price. But this may upset markets and cause people to invest in silver because of dollar and stock market repercussion fears. If China and the US do solve these difficulties, then industrial demand may go back up, but monetary demand may fall, as the fear factor will have reduced. And so the question is, the conundrum is, which one will have the greater effect? All other things, of course, being equal, such as Iranian conflicts, for example. Something for you to ponder during Independence Day, which we wish to every one of our American colleagues and subscribers to be an amazing day. So to ponder while you are watching these celebrations, are we going to see higher silver prices over the coming months or lower silver prices? Do share your thoughts and help us solve this conundrum. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.